Today I want to talk about the true cost of buying a home because oftentimes it is a lot more than you think. And homeownership these days is kind of characterized as the American dream. Some way to somehow fulfill this lifelong destiny that you have to become a homeowner. And if you don't fulfill that destiny, then you are somehow a loser. Once you see how much money it actually costs to maintain a house and how much it costs to become a homeowner, you might change your tune on that. And unfortunately, first-time home buyers are the ones who are blindsided by these costs the most because they've never done it before. They don't have the experience. All they have is the boomers yelling in their ear that you got to become a homeowner, otherwise you're never going to have anything in life. Now, first of all, if you want to buy a home, the biggest expense that you are going to encounter from day one is you need to be able to come up with a down payment. And 20% down has always been the long run suggestion of how much you should have as a down payment, even though it's not a requirement. To this day, you do not have to have 20% down in order to buy a house, but I still strongly recommend it for a lot of different reasons. Number one, you are going to have 20% equity in that property right from the beginning. So that protects you from housing market downturns like we're going through right now. It protects you against being underwater on your mortgage, especially if you need to sell the house within a few years of buying it unexpectedly. You don't have to pay any private mortgage insurance, which can be an extra few $100s a month, which really adds up. And it's also a hassle to remove the private mortgage insurance from your loan once you get it. So that's an extra barrier, an extra expense you don't have to have if you put 20% down. But I can see why a lot of home buyers choose not to, because the average down payment for home buyers today is about 12% down, and that's just an average, right? So that means most home buyers are probably putting down 10% for a conventional mortgage, and that's pretty true from what I saw based on a lot of my clients when I was selling real estate. And if you're not doing that, then you're likely putting down 3.5% for an FHA mortgage, or maybe even 0% down if you're getting a VA loan. But here's the problem. With houses today at the median home price of about $400,000, if you want to put 20% down, that means you got to come up with 80 grand as a first-time home buyer. And a lot of people simply don't have that unless they get lucky enough to be gifted a lot of that money from their rich parents. And another reason I suggest putting the 20% down is because the higher your initial down payment is, then the lower your monthly mortgage payment will be, and that will also help you out when it comes to your monthly payments. You're going to pay less interest over time because your mortgage amount will be lower, and you're going to have more breathing room in your monthly budget. But since most people do not put 20% down, you are going to be stuck with private mortgage insurance, which is known as PMI. And PMI fees are typically waived once the balance on your mortgage reaches 79% or less of the purchase price, but some lenders may waive PMI prior to that if the value of the home increases considerably before the loan balance reaches its predetermined marker. But I would not be counting on that these days, as most markets are seeing depreciation in home prices, not appreciation, which is another reason why you should put 20% down. And then of course you're going to have closing costs, and closing costs can range pretty considerably depending on the state you live in, the county you live in, how much money you're spending on the property you're buying, all sorts of things like that. But in general, closing costs are going to cost you somewhere in the neighborhood of 2% to 5% of the loan principal, and the closing costs have to be paid at the closing table. This isn't something that you can delay till later on. You have to pay it right away. So between the down payment and the closing costs, you could be coming up with 25% of the property's value right up front. Then, of course, you're going to have moving expenses, which can also vary quite substantially depending on where you live, how much stuff that you have, and how long the move might actually take. A lot of movers charge by the hour these days. And if you don't have a lot of stuff to move, then you're going to have a lot of stuff to buy once you get into the house. So either way, it's going to cost you a pretty penny to move into a new house. It's estimated that short local moves cost anywhere between $1,000 and $2,500 for the most part. But if you're moving long distance and you have a bigger move to make, you could be spending anywhere between $2,700 and $10,000 just on the movers. This is such a cool little neighborhood, right? You have all these little townhouses here with all these little walking paths in the back. It's my first time ever doing a video here at this little neighborhood in Larkspur. It's always nice to find these little hidden gems here. And you know, this is the kind of thing, actually, now that I'm thinking about it, now that I'm walking through here, that actually makes a lot of people want to buy a place. Like, they come and visit a place like this and like, wow, this is great. You know, they see the showing and they're like, you know, I can't find anything like this for rent. I need to buy this. And unfortunately, a lot of people really are suckered in by the lifestyle, and then they worry about how they're going to pay for it later, because a lot of times owning a place does offer you up more opportunities and more options when it comes to deciding on where you're going to live than you would typically have as a renter. And it's the lifestyle that sells these homes and tricks people into thinking that they'll somehow magically come up with a way to pay for all this stuff and kind of worry about it after they're already in the home, which a lot of people these days are finding out that was a big mistake, which is why you have 80–90% of home buyers that purchased in the past 3 years with buyer's remorse and are looking to unload property now. Having privacy these days, especially online privacy, is becoming an increasingly rare phenomenon, which is why today's video is sponsored by Delete Me. Delete Me is a hands-free subscription service that will remove your personal information that's being sold online, and Delete Me's privacy experts remove you from hundreds of data brokers all year long. And here's the perfect example. I've been working with Delete Me for over a year now, and you can see just in this most recent report I received from Delete Me, they reviewed over 12,000 listings on my behalf, and there were 7 listings removed, which you might say that doesn't sound like a lot, but they have already removed hundreds of listings on my behalf from data brokers. And I just love that Delete Me is constantly working in the background to try and get your information removed from as many data brokers as possible and make sure that that data doesn't get repopulated once it is removed. So make sure to get 20% off your Delete Me subscription by joining today using my link down in the description below at joindeleteme.com/boardandarrow, or use the QR code on the screen. And then we have homeowners insurance, which is becoming a bigger and bigger expense for people depending on where you live. And natural disasters are a problem everywhere. You know, in the West here, we have wildfires and potentially earthquakes. In the South, you got hurricanes. In the Midwest, there's hailstorms and blizzards. There's problems everywhere. The Northeast is also susceptible to major thunderstorms and flooding and hurricane damage as well. So there's nowhere you can go to escape some sort of natural disaster. Right now, it's projected that homeowners insurance is going to increase by 8% to a national average of $3,500 by the end of the year, and typical homeowners will see their costs rise an estimated $261 over the next 12 months. And of course, areas that are more prone to natural disasters and have had more natural disasters over the years are going to see larger premium increases, and labor and material costs are also projected to increase, especially if the proposed tariffs do not go away. But here's the thing. Even less disaster-prone areas are still going to see insurance premium increases simply due to the fact that repairs have become more costly, and these insurance companies have to raise premiums for everybody in order to compensate for all the money that they lose on the markets where they have a lot of payouts. And that's by design. Don't forget that insurance companies are for-profit corporations, and their sole purpose is to increase profits for their shareholders. That is a legal obligation they have to do that. These home insurance premium increases are due to these insurance companies trying to stay profitable, so they will pass the increased losses on to customers through higher premiums. That is their business model. This is what they do. All this data is coming from Insurify, by the way, and this is their latest projections of where insurance rates are going to go. And check this out. I'm going to roll the chart here for the insurance increases that are proposed in all of these states moving forward. And surprise, surprise, who's at the top of the list? Who's going to be paying the most for insurance right now? Florida, of course, with the average yearly rate at $14,000 in 2024. Well, it's expected to rise to $15,500 by the end of 2025, which is a 9% increase. Hialeah, which is a subdivision in a small city within Miami, is projected to see its average cost rise to almost $27,000 per year in homeowners insurance premiums. Guys, that is insane. And let me tell you, if you're not unfamiliar with Miami, Hialeah is not a nice area of town, okay? Hialeah is pretty dangerous and is mostly pretty ghetto, to be honest. And they're paying $27,000 a year for homeowners insurance over there. I don't even know how anybody over there is paying that because it's a very poor part of town as well. But Louisiana is coming in second for homeowners paying the most in insurance premiums. In 2024, their annual cost was almost $11,000 for the year. And Louisiana remains the least profitable state for homeowners insurance companies because of its large loss ratio, which is the gap between the claims paid out and the premiums charged, which is exactly why they charge people more in areas that don't have a lot of natural disasters to help pay for the disasters they do have in Louisiana. And they're looking at going from $11,000 a year to $14,000 a year by the end of 2025. And now, just one quick disclaimer, these are just averages. It's not like everybody's going to be paying this much if you live in Louisiana or in Florida. Those are just the average numbers based on how much people on the low end pay, how much people in the middle, and how much people on the high end pay. Like in Florida, for example, it's still possible to buy a house inland in a higher elevation area, less prone to flooding, and still have a homeowner's insurance premium of $4,000 a year or less. It doesn't mean that everybody's going to be paying $10,000, $11,000, $14,000 a year. Oklahoma is actually set to be the third most expensive state. They were paying about $7,800 a year, and they're going to be seeing their premiums rise to $8,300 per year. And in Oklahoma, obviously the biggest threat over there are tornadoes. They also have hailstorms and severe winds, things like that. And even people in Oklahoma are starting to see non-renewal situations come up for them. Farmers Insurance is the largest homeowners insurance company in Oklahoma, and they said for 2025 they're not going to be renewing about 1,300 policies due to wildfire risk. Not even one of the biggest ones that are typically worried about over there, like tornadoes or hail. They're not going to be renewing people for wildfire risk. That's insane. In Oklahoma, how you doing?
I hear you. We're moving, and it was impossible to get new insurance.
Really?
It was so hard.
Do you want to go on the video and talk about it?
We're trying to get to a restaurant with three.
Oh.
There's 2 other kids in there. I would, but you can feel free to use that.
All right, cool. Thanks, man. So take a look at this chart here with the breakdown of the most expensive states for homeowners insurance now. We got Florida at the top of the list, projected to go up to over $15,000 a year. Louisiana is projected to go up to $14,000 a year. Then you got Oklahoma, Colorado, Texas, Alabama, Nebraska, Mississippi, Arkansas, and Kansas. A lot of places in the heartland of the country that you wouldn't necessarily think would be the most expensive places for homeowners insurance, but they are. And one thing I thought was interesting from this list is Alabama is one of these top 10 states for the most expensive insurance now. And just a couple years ago, a lot of people were leaving Florida due to high insurance rates and fleeing to Alabama for lower rates. But it seems like Alabama is starting to catch up. It's still a lot less expensive than Florida, but it's on the top 10 list now. Here in California, homeowners are set to see their insurance rise 21% this year to an average annual cost of about $3,000 a year, which is still cheap compared to a lot of these other states. But the percentage of increase is what you have to worry about, because if you continue seeing increases on that level, it's substantial, guys. I just ran into one of the neighbors here at this complex in Larkspur, and he said that him and his family are moving out of this place right here, this lovely little neighborhood I'm walking through, because they couldn't get a good price on the renewal for their insurance here. So they're leaving because of insurance. This guy just told me that. But according to Insurify, people in every single state are going to see their homeowners insurance increase anywhere between 2% and 27% just this year in 2025. So those are substantial increases in just 1 year. And if you think that's not enough for unexpected expenses, how about the mansion tax? Well, now New Jersey just signed a new law that's going to be having their own mansion tax in New Jersey as well. Here's what this new law does, is it actually shifts all of the tax to the seller at a rate of 3.5%. which you already have on top of commissions, on top of closing costs, on top of transfer taxes when you sell the property. So now selling your property could lead to a situation where you're now paying 10% or more of the selling price of your home just in taxes and fees. Previously, New Jersey imposed a flat 1% tax on home sales over $1 million that was usually paid by the buyer. But now the tax burden shifts from the buyer to the seller, and the tax becomes tiered, ranging anywhere between 1 and 3.5% based on how high the sale price exceeds $1 million. So a $3.5 million sale could generate a tax bill of over $47,000, which is nearly double under this new system. And here's the problem, guys. Sales of $1 million plus homes in New Jersey have more than doubled since 2019. And in 2024, about 11,000 houses sold for more than $1 million. Over 2,500 homes over $1 million sold just in the first quarter of 2025. And if you think about this for a minute and you see how much $1 million home is these days, in many cases, especially in a state like New Jersey that's very expensive, $1 million home is not a mansion, okay? So this mansion tax is applying to people that don't really own a mansion. You just might own some whatever house that just happened to be in a neighborhood that saw massive appreciation, and now you're on the hook for this mansion tax even though you don't own a mansion. Also, this tax cannot be deducted on federal taxes, unlike other costs like the SALT deduction, for example. Sellers might also face additional capital gains taxes if their home equity exceeds the federal exclusion limits, which adds to your tax burden, something else I talked about a little over a week ago. And this mansion tax is expected to raise over $550 million annually for New Jersey public programs. So of course, sellers are looking at ways to get out of this. One of the obvious ways is they're looking to negotiate the cost and share the burden with the buyer. They're also maybe even looking at pricing homes strategically just under the key thresholds, especially under the $2.5 million in order to avoid the higher tax tiers. And it's increasingly becoming a punishment to own a more expensive home in a lot of places. New York City has a progressive mansion tax up to 3.9% on sales above $25 million. Los Angeles adds a 4% tax on sales over $5.15 million, which is funding the homeless industrial complex. That's a video for itself right there. Washington State, they use a graduated excise tax on pricier home sales, and surprisingly and luckily for voters in Chicago, they rejected a mansion tax back in 2024. And obviously the problem with this is that the rapid home price growth that we saw over the last 5 years means that homes that were once considered modest are now $1 million mansions that sellers have to fork over extra money just to sell. So if you live in New Jersey, I'm sorry to tell you, but you really miss the boat when it comes to selling your property, because not only did you miss out on the frenzy of the crazy amount of over asking price offers and multiple offers and things like that. I have heard from people that some of that is still going on there, but probably not to the extent like before. But now you also have this new tax to pay if you waited. Now, one other thing that was in the real estate news recently is that there was a new court ruling on June 6th. The U.S. Court of Appeals for the Federal Circuit denied the federal government's petition for a rehearing on Darby versus United States, which is a case that claims the CDC's eviction moratorium was unconstitutional under the Fifth Amendment. And it turns out the court is siding with the property owners for a change, which is great to hear. The court maintains that the legal framework that protects housing providers against uncompensated government takings is being upheld. So it was in fact wrong for the government to do this and to try and make it so people didn't have to pay their rents and stick landlords with the bill during the pandemic. And while it's said that there's going to be lots of legal battles moving forward regarding this situation, I would just like to know and put this question out there, like, who's going to pay for all of that money that's owed to landlords? Do you think the government's going to cut you a check? Fat chance. It ain't going to happen. Just because it gets ruled unconstitutional and they find out that our government broke the law putting these rent moratoriums in place doesn't mean you're ever going to see a dime of that money that you were supposed to get. That's really the big problem here. Sure, they might make it where you can track down the tenants and somehow get some money out of them, but good luck with that. But the reality is, no federal agency should have the authority to override property rights and create sweeping policy without congressional action. In fact, that's a quote from the National Association of Realtors. And I don't always agree with what they say, but in this case, I do. Even though the National Association of Realtors is one big mafia, they did advocate for homeowners' rights in this court case. So they're not all bad, and they do try to do the right thing sometimes. But this court decision underscores an essential principle, which is that even in times of crisis, the constitutional rights of property owners must be respected. So just like pretty much everything else, it's a giant mess, and we'll have to see how it all shakes out in the end, and if there's going to be any payments owed to landlords that lost thousands or even tens of thousands of dollars due to non-payment of rent from some of their tenants. And by the way, this video, guys, is just kind of cracking the surface on some of the expenses that you're going to have to pay for as a homeowner. We didn't actually cover everything in this video because this video would just be too long, and I wanted to get to some real estate news stories here. But just keep all this in mind if you're somebody that wants to become a homeowner. You know, when I have people telling me that I just randomly pass by here on the street, that the reason they're selling their home is because of homeowners insurance, you should think about stuff like that and take that to heart, because that's a real struggle for a lot of homeowners. Sometimes it's hard to know the true cost of ownership until you're already in it. So keep that in mind as you weigh your decision on whether it's better to buy versus rent in 2025. So if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.